Okay. Hi guys. So again, we're here. But for today, we will discuss FAFVOCI. I want to emphasize na pag equity instruments, parehas lang ang number 1 and number 2 regardless if it is FAFVPL or FAFVOCI. However, pag FAFVOCI, there will be two common changes. Number 1 is changes in fair value will be treated in statement of comprehensive income. Pag FAFVPL sa profit or loss. Number 2, transaction cost. Kasi pag FAFVOCI, kasama ang transaction cost sa FAFVOCI account. Okay, let's go to the problem. Kung napapansin nyo, medyo familiar siya sa FAFVPL problem na binigay ko. The same facts except that FAFVOCI natin siya tinitreat. On January 1, 20X1, ABC Company purchased 1,000 shares of DF Company for 5 pesos each. Transaction cost of 500 pesos were incurred. Okay? Napapansin nyo, ang ide-debit natin, 5,500. Kasi, sinama natin yung transaction cost sa FAFVOCI account. Iba to sa FAFVPL because if FAFVPL, transaction costs are expense. Dito, sinasama natin siya sa FAFVOCI account. So, okay. That is the first common difference. Okay. Let's go with the next. During June 1, 20X1, DF Company declared cash dividends of 0.5 pesos per share. Kung nakikita nyo, so again, the rule here is dividend income is recognized upon declaration. Hindi pa natin actually na-receive yung cash, but the fact that it is already declared by DF Company means that we already consider it as income. So that's why we debit dividends receivable, we credit dividend income. And on June 30, ABC Company received the cash dividends. Dito, we debit cash. Kasi yung 500 pesos, na-receive na natin siya. And we credit dividends receivable. Okay. Kung napapansin nyo, the same pa rin yung facts sa FAFVPL. Pero, tingnan natin. During December 31, 20X1, the market price of DF share is 6 pesos each. Okay. Market price is 6 pesos per share times 1,000 shares is equals to 6,000 pesos. Pero, ang nakikita nyong difference, yung cost. Kasi, sinama natin yung transaction cost sa FAFVOCI account. So, kaya, 5,500 pesos siya. Okay, so kaya, the unrealized gain to be recognized in other comprehensive income is 500 pesos. So that's why we debit FAFVOCI, we credit unrealized gain. Remember, fair value changes are recognized in other comprehensive income. So okay, that's why the credit is 500. Okay, so again, this is the journal entry. Okay, eto, let's go straight to December 31, 20X2. During December 31, 20X2, the market price of DF share is 8 pesos each. Ito, may dalawang separate questions. Pero, iba yung answer. So the first question is, how much unrealized gain will be presented in statement of comprehensive income? Okay? And the second question is, how much unrealized gain will be presented in balance sheet? Okay. Eto. So, going back, the difference between statement of comprehensive income sa balance sheet, kasi sa statement of comprehensive income, we only put the changes or the changes that happened during the year. Meanwhile, sa balance sheet, pag balance sheet ang tinatalk about natin, we care more on the permanent accounts. So, okay? So, the difference will come in. Pag statement of comprehensive income, we're only dealing with changes or temporary accounts. Pag balance sheet naman, we put permanent accounts. Okay? So, makikita natin ang number 1. Remember that the market value of shares on December 31, 20x2 is 8 pesos times 1,000 shares equals 8,000 pesos. Less market value on December 31, 20x1. So 6 times 1,000 shares equals 6,000 pesos. So this is the unrealized gain to be presented in Statement of Comprehensive Income. 2,000 pesos. Kasi ito yung changes between December 31, 20x1 and December 31, 20x2. So again, change in market value for the year will only be presented in Statement of Comprehensive Income. So, okay. So, at the end of the year, by December 31, 20x2, we debit FAFVOCI and we credit unrealized gain, other comprehensive income. But, okay, let's talk about number 2. What I want to emphasize is this account is a permanent account. Okay? Unrealized gain, other comprehensive income is a permanent account. What does it mean? It means that it will never be closed. Okay? Hindi to katulad ng profit or loss. Kasi pag profit or loss, at the end of the year, we close it to retained earnings. Ito naman, unrealized gain, hindi to kino-close. So this is a permanent account. This will remain in the balance sheet. Okay, let's look on solution number 2. Remember, yung 2,000 pesos na to, ito lang yung nakapresent sa other comprehensive or sa statement of comprehensive income. But, remember, during 20x1, we already recognize unrealized gain of 500. So, okay? So, that's why the unrealized gain to be presented in the balance sheet is 2,500 pesos. Okay? The unrealized gain to be presented in the balance sheet will be 2,500 pesos. Kasi, inad natin lahat ng gains or unrealized gains from the time of purchase. The logic here is unrealized gain account is a permanent account. So again, unrealized gain, OCI, is not closed in retained earnings. Thus, the cumulative change in other comprehensive income shall be presented in the balance sheet under shareholders' equity. And finally, to remind you, unrealized gain account, OCI, is not the same with retained earnings. Unrealized gain, OCI, is a permanent account. Okay, ito. Let's try to look how about debt instruments. Okay, remember that the business model for FAFVOCI securities, it is for the purpose of solely is for the collection of principal and interest and for selling. So what does it mean? Meron tayong dalawang gagawin. Number one, we need to amortize the bond. So kailangan nating gumawa ng amortization table. Secondly is, every time we amortize, we compare the carrying amount with the fair value. And the difference will be treated, or it will be recorded in other comprehensive income. Okay. On January 1, 2017, Michelle Company purchased bonds with face amount of 5 million pesos. The entity paid 4,600,000 plus transaction cost of 142,000. Okay? The bonds mature on December 31, 2019 and pay 6% interest annually. This is the stated rate. Okay? Ibig sabihin nito, we can receive 6% interest annually and 8% effective yield. So yung 8% na to, ito yung effective rate. So 6% is the stated rate and 8% is the effective rate. So step 1, we confirm that the present value is 4,742,000. So ang ginawa natin, we added the 4,600,000 and 142,000. So equals 4,742,000. The assumption here is transaction costs are already considered in solving for the present value. So to make sure na ang present value talaga 4,742,000, which is the sum of the purchase price and the transaction cost. Since, again, pag FAFVOCI, we include the transaction cost sa FAFVOCI account. Okay, tingnan natin. So, the effective rate is 8%. The first thing is we want to find the present value for the principal. 5 million times 8% raised to negative 3 is 3,969,161. And then, kailangan din natin hanapin yung present value for the yearly interest. So, face value times stated rate is equals to 300,000 pesos. And we solve for the annuity, ordinary annuity for 3 years. Ordinary annuity. So, 300,000 per year equals 773,129. So, ang gagawin natin is we will add 3,969,161 plus 773,129 is equals 4,742,000, which is equivalent to the present value that we already presumed kanina. So, correct na ang present value, 4,742,000. Okay? The next thing that we will do is to record the purchase. We debit FAFVOCI, we credit cash. 4,742,000. Okay? So the step 2 is to create an amortization table. So ang gagawin natin sa 4,742,000, we amortize. Ang goal natin at the end of the term, it will become 5 million. Okay? We solve for the interest received by multiplying the face amount, which is 5 million, times 6%, equals 300,000. Ito naman, interest income, this can be computed by multiplying 4,742,000 times 8%, equals 360. And we compare the difference between interest received and interest income. So that is the amortization. Okay? Since, remember, ang goal natin is to reach 5 million, ang gagawin natin sa 79,360, we add this to 4,742,000. So, 4,742,000 plus 79,360 equals 4,821,360. So, okay. So, we journalize the amortization. Okay. So, remember, for the first year, we had cash received of 300,000. We have interest revenue and we have FAFVOCI. So, remember, pansinin nyo, naka-debit si FAFVOCI. Kasi ang goal natin is yung present value, madagdagan siya ng madagdagan hanggang umabot siya ng 5 million. Okay, ito. But, pag FAFVOCI, we do not stop there. We also compare the present value with the market price to determine unrealized gain, OCI. The market value daw on December 31 is 5 million times 1.05. Kasi, pag nakalagay na 105, it means 1.05. Kaya, pag ang nakalagay, quoted at 110, it means 1.1. So, since 105, then, it means na we multiply 5 million times 1.05 equals 5,250,000. And then, remember, the carrying amount as of December 31, 2017, based sa amortization table is 4,821,360. Okay, ano yung effect? Okay, so yung difference ng dalawa is the unrealized gain to be recognized in OCI. So, okay, this journal entry is made to account for the unrealized gain in OCI. So, that's why we debit FAFVOCI. We also credit unrealized gain OCI. 428,640. Okay, let's go to the next year. The same. So, we take into account the interest received, which is 300,000 pesos, and the interest revenue, which can be found by multiplying 4,821,360 times 8%. And again, may difference. So, ang effect nito, matataas yung carrying amount. Okay? Since we debited FAFVOCI, tataas ang present value or carrying amount. Okay. At the end of the year, the bonds are quoted at 110. So, anong ulit ang ibig sabihin ng 110? It is 1.1. Okay? 1.1. Kaya, ang gagawin natin sa market value is 5 million, which is the face amount, times 1.1. Since yun yung market quotation ng isang bond, equals 5,500,000. And we deduct it to the carrying amount, which is, ngayon, yung carrying amount as of December 31, 2018, it is already 4,907,069. Okay. Okay. I want to clarify. Yung makukuha natin dito, eto lang yung cumulative gain. So the cumulative gain is for 592,731. It means na as of 2018, ito yung total gain mo. Okay? Ito yung total gain mo as of 2018. But this is the twist. Okay? Ito yung twist. Remember, during 2017, meron ka nang na-recognize na unrealized gain. Okay? So remember, the 428,640, na-recognize mo na to dati. Okay? So, ang gagawin natin is we deduct 592,731 minus 428,640. So, the increase in unrealized gain for the year 2018 is 164,291. Since yung 428,640, we already recognized it during 2017. So, yung hindi natin nare-recognize, eto. Okay. So, that's why our journal entry will be, we debit FAFVOCI 164,291. And unrealized gain, OCI, will be 164,291. Okay, eto. Before we end, let's review. Di ba meron akong dalawang questions na binigay? Or dalawang questions. Number 1, how much is the gain to be or OCI that will be presented in a statement of other comprehensive income? Ang answer is 164,291. Pag ang tinatanong, magkano yung i-present natin sa statement of comprehensive income? Kasi, ito yung naging increase for the year. Okay? So, for the year, nag-increase siya ng 164,291. And, yung second question naman, magkano yung i-present natin sa balance sheet? Okay. The second question is, how much is the OCI that will be presented on the balance sheet, specifically on shareholders' equity? The answer there is ito. Okay? Remember, pag ang tinatanong, how much is the gain to be recognized in the balance sheet, we're talking about the cumulative gain. Okay? So the cumulative gain is 592,731. So cumulative means total gains, taking into account the unrealized gain for 2017, and 2018. Okay? That's it, guys. So that is the discussion for OCI. Kung mapapansin nyo, pag equity security, madali lang. Kasi straightforward yung rules. But I do recognize na pag debt security, medyo mahirap siya kasi gagawa ka ng amortization table and you also need to compare the carrying amount to the market value every year. So that's all, guys. Thank you.